China's factory output and retail sales grew at their weakest pace in over a year for October. The country's National Bureau of Statistics data showed that industrial output grew 4.9% year-on-year. That's the weakest annual pace since August 2024 and down on a 6.5% rise in September of this year. It also missed a 5.5% increase forecast in a Reuters poll. Retail sales, a gauge of consumption, expanded 2.9% last month. That's also China's worst pace since last August, easing from a 3% rise in September compared with a forecast gain of 2.8%. Pressure is now piling on policymakers to revamp the $19 trillion export-driven economy. Policymakers acknowledge the need for change to address historical supply-demand imbalances, lift household consumption, and tackle towering local government debt that keeps provinces from being self-reliant. All the same, they also recognize structural reform will be painful and is fraught with political risk at a time when U.S. President Donald Trump's trade war has ramped up pressure on the economy. Meanwhile, new home prices fell 0.5% month-on-month, the steepest decline since October last year, after a 0.4% drop in September, according to Reuters calculations based on NBS data. The continued decline, especially in September and October, traditionally a peak sales season, highlights the challenges Beijing faces as it seeks to help the sector find its footing amid growth headwinds. China's ruling Communist Party met last month to chart the country's economic course for the next 5 years. They pledged to lift household consumption share of GDP, quote, significantly, while also stressing the need to reinforce its vast industrial base.